Welcome back. Well, let's focus on Amber Enterprises. The stock is up close to around 80% the last 1 year or so. Quarter 3 was a weak quarter for them with subdued revenue growth, but they are targeting margin expansion in the coming years, and also they are sounding very, very optimistic on the revenue growth from here on. Mr. Jasbir Singh, the chairman and CEO of the company, joins us on the show. Hi, Mr. Singh. Good morning, and thanks so much for joining in. Well, the past quarter was a little bit weakish, but I was looking at your con call and you're guiding for far better times to come in FY25 as well as FY26. Give us a few details. What kind of a revenue growth can you look at? And also segment-wise, how do you see things panning out? Because I'm looking at your breakup, the electronic division as well as the railways and mobility division has been growing at a very fast clip. Please go ahead.
Thank you for having me, show, and good morning. Yes, indeed, we started as a room air conditioner company, and then gradually we diversified into adjacencies, into electronics and railways, and then scaled those verticals up. In electronics, we are very optimistic. We started with PCBA 5 years back with just giving solutions in the space of air conditioners, and then we graduated into refrigerators, washing machine, other consumer durable products, and then we added wearables, we've added telecom, we've added smart meters now, and we've also added auto. And we are just about to get approval from the defense sector also in the electronics PCBA space. So we are quite optimistic, and plus we have acquired Ascent Circuits 60% stake, which strengthens our electronic EMS portfolio for the backward integration. It's a company which delivers complete PCB applications in various single-sided, double-sided, and multiple-sided and multiple-layer PCBs. Overall, if I see, I think electronic vertical, we have already guided, and I'll repeat it, that we will double our revenues in next 2 financial years. And we are very optimistic for that. Secondly, on the railway front, we've added this vertical by supplying a room air conditioner for railway applications in 2019, and then scaled it up into the metro space, into EV buses, some part of defense applications also. But we were a single product company till now, but now we have added doors and gangways and pantry systems, which has taken our addressable market from 4% bill of material of a passenger car to almost about 10% of a passenger car. And recently we have done a joint venture with Titagad, where we will be supplying more railway subsystem components to bring up the whole ecosystem of railways.
Right. All right. Mr. Singh, so you have given us a fair bit of detail. Consumer durable is still 72% of your business, but the focus on the other two businesses obviously is going to be increasing, since you're saying that the electronic division is going to double its revenues in the next 2 years. So give us a revenue composition. As of now, the consumer durable is 72%. You have electronic division at around 19-20%. And railways, which is growing very well, that's at around 9%. Say in the next 2 years, going by all that you're saying, you have done some inorganic growth, you're focused a lot on diversifying away from consumer durables. How does the revenue pie shape up?
I think if I see last 4 years journey, we have shifted from room AC. Room AC has come down to 38% in the consolidated revenue, and now it will further come down to 30% in next financial year. And electronics from 19%, it will go to about 25-30% in next 2 years. And railway also will add from FY26 onwards, because we've taken a lot of projects. Order book is very strong, so that will start contributing significantly on the consolidated balance sheet.
Right. So these are all numbers for FY26, Mr. Singh, right? Consumer durables 30, electronics 25, and there'll be railways which will be chunky as well.
Yeah, I spoke about the range. I mean, it's very difficult to pinpoint a single number.
Absolutely.
But yes, that's it. So we are building these two verticals. I mean, we entered into adjacencies. Now we are scaling them up, and we are optimistic for a good growth in both the segments.
We just had the management of Blue Star earlier with us. I'm sure you heard part of the conversation, and he was talking about competitive intensity in room air conditioners being extremely high, right? Margins, etc., would perhaps be slightly on a slope, on the downward slope, not too sharp, but there is pressure. Will some of these electronics, railways, etc., more than make up for if there is a sharp fall off on the room air conditioner side, sharper than what you think, what you forecast?
Yeah, actually, you see, we are a B2B company. So in a B2B space, especially in the room air conditioners, there has been a structural shift. So first, we were hit by 2 COVID waves in the peak of the season. Then competitive landscape changed. And then finally, most of our customers have started the assembly units, manufacturing air conditioners on their own. So we shifted our strategy into components. And the mix of components, we will be setting off the margin decrease in the finished good versus the increase in this component sector. Plus, electronics and railway application will increase the margin of overall balance sheet.
Okay.
Mr. Singh, sorry, just one more thing. On railways, you said that you are now, your total addressable market is about 10% of a passenger car. You mean a railway coach, right? What is the, in terms of value, what's that number, the TAM on the railway side now that you're targeting?
So on the railway side, one Vande Bharat Express, just for an example, has 16 passenger cars. And in one passenger car, we were addressing earlier just 4%. Now we have moved to 10%. That means we will be addressing about 75 to 80 lakh rupees per passenger car. With the joint venture with Titagarh, now we are building up more component ecosystem. There we will be total addressing about 2 crore to 2.5 crores in a one passenger car. So we are building up many components as a consolidated solution provider for the railway ecosystem. So now you can understand that there have been railway ministries notification announcements that there will be about 3,000 new Vande Bharat Express plus 25 new cities will be having new metro lines, and existing metro lines are increasing its length. So that means we are talking of almost about 10 to 12 billion dollar worth of the total addressable market for our kind of a components which we will be delivering in next 4 to 5 years.
So that's 10 to 12 billion dollars of an addressable market for your kind of components in the railway system space. I just want to understand what's the order book currently that you have just from railways, and what does that feature in as a percentage of your total order book?
So we have order book of almost about 2,000 crores in our railway segment. And what we have done is basically from room air conditioner is about 25 to 28,000 crore market, and on the manufacturing footprint it converts into 17,000 crore. So almost $2 billion. So what we have done is we've increased two adjacencies, electronics and railways. So in railways, addressable market for next 4-5 years is about $10 billion. Looking into if all the announcements done by Ministry of Railways are actually implemented. And in electronic EMS, that electronics is a big space. Already $118 billion worth of electronics are getting manufactured. But if I speak about TAM of what Amber is delivering, PCBA and PCB, this will be a good addressable market of $25 to $30 billion moving forward in next 5 years.
So you said your order book currently is 2,000 crores, right? What is the order visibility? I understand the addressable market, but over and above this 2,000 crores, what is the order visibility from railways over next 12 to 18 months?
So in 12 to 18 months, like these, all 2,000 crore projects have to be delivered in the next 4 years. And plus there are additional new tenders which are coming next financial year. So it will keep on rolling on the basis of the announcements done by the Ministry of Railway and Urban Development Ministry for the metro space.
All right. Profitability is something that the street looks forward to, Mr. Singh. So before we let you go, wanted the guidance on that front, because you were guiding that margins, I think, move to around 7.5% in the next year, I think FY25 and FY26. So give us an updated margin guidance, point number one. And you've spent a lot, on capacity expansion, etc. And the street was hoping that the ROCE will start improving to high teens. So what is the guidance there? I think you were talking about 19% in 2026. Please give us a number on both these two, margins and ROCE.
So yes, you're right. Margins, we are looking towards 7.5% moving forward in next financial year. And further, we will be increasing our margins in FY26 also, because our railway order book, which will start delivering, and electronics also, we've started, we will be touching almost about 7.5% or 7 to 7.5%. And on the guidance of ROCE, we have already guided. I'll again repeat that in next 3 years, we will be in the range of 19 to 21%.
All right. And you also, at the start of this interview, briefly mentioned about some defense potential business coming in. What is the update out there?
We've already started delivering defense products in our railway, the applications of the mobility, where we've started getting orders. Almost about 5% of the order book, I think, of complete order book will be coming from defense this side. And electronics, the products are under approvals. I believe in next 4 quarters, we should be receiving those approvals. And from FY26, we will start supplying those products in electronics.
Okay, Mr. Singh, thank you very much for joining us. Great to speak with you here on CNBC-TV18. It's a pleasure. Good luck, sir. That's Amber with Perspective. Stocks absolutely flat right now.